Wow, so Adam Aaron is exposing synthetic shares. He's also strengthening the company on a fundamental basis and is rewarding shareholders in multiple ways. So I think it's appropriate that we put on the good luck leprechaun hat for this video and we go over exactly what is happening with this new APE Security and everything you guys need to know, how it benefits the company fundamentally, like I said, and how it exposes the synthetic shares as well. So we're gonna start with the tweets that Adam Aaron put out, but I really want to go over this open letter because I think that is more telling than even these tweets. So the first one: in this important tweet storm, a dozen messages explain a bold step. In addition to releasing today our handsomely improving second quarter 2022 earnings, we also broke out the 3D chessboard and got creative. A big move that addresses so many of your asks. Today, we pounce. And it says, 2. Q2 AMC results very encouraging. Revenue 2.5 times Q2 2021 and positive adjusted EBITDA, an enormous improvement over Q2 2021. As promised, it is time to take bold action as AMC preferred equity dividend to holders of common shares. Read this open letter. It says, thank you for being a passionate supporter of AMC. Together, we have successfully navigated many obstacles since the onset of the COVID-19 pandemic. There's more work ahead of us all, but you can see just about every day that we are making real progress towards recovery and transformation. I am writing you today about a major step forward for AMC Entertainment. In my view, probably the biggest favorable development of all of calendar 2022. Looking at the long-term future of our company, we believe this is truly great news for AMC and not such good news for those prophets of doom who may be rooting against us. Earlier this year, I said that AMC intended to take important and bold steps to strengthen our company and address some of the grievances that many of you voice repeatedly in social media and in other forums. I also said through the art of leading a company as complex and one as much in the spotlight as AMC is knowing what to do and what not to do, knowing when to do it and when not to do it. I commented that, in my opinion, we should patiently wait until at least our posting of AMC's second quarter 2022 financial results. And I apologize. It's very small lettering, especially on my screen. I know it is for your guys as well. But it says, that occurred today. In our minds, those results are spectacularly encouraging as we show dramatically increasing attendance and revenues, along with positive adjusted EBITDA, so very much improved versus the same quarter last year. Thank you, Dr. Stephen Strange. Thank you, Tom Cruise. Thank you, Elvis Presley. And thank you to all of those hungry people eating Jurassic dinosaurs. So, ladies and gentlemen and ladies, today we pounce. With the backdrop of AMC's terrific results in the second quarter, it is time for us to take decisive and glorious action. Today we are announcing that later this month, AMC will be creating a new class of securities and will be issuing an AMC preferred equity unit stock dividend. This is in bold, right? This is all in capitals. Payable only to holders of our 516,820,595 issued and outstanding common shares. This includes all of our U.S. and all of our international shareholders as well. We will issue these new AMC preferred equity units on a 1-for-1 basis. Investors will get one AMC preferred equity unit for each AMC common share that they own as of the record date in mid-August, along with our common shares which trade now and will continue to trade on the New York Stock Exchange under ticker symbol AMC. This new AMC preferred equity unit also will be a tradable security. Now, the biggest thing to really point out about this synthetic share situation and really exposing that is this, in my personal opinion, is the bold letters of where does it say it again? Payable only. Payable only. That and today we pounce is the only things that are bold here in this letter. And let me be clear. Adam Aaron knows what the situation looks like as far as shares. I'm pretty sure he can confidently say that there is synthetic shares out there. Now, he can't go out there and say that just in those terms, right? Because you got to have definitive proof. But look at this. It says, so too, this issuance of 516 million new APEs will essentially serve the same purpose as the much voiced request for a share count, as the new AMC preferred equity unit will only go to holders of company issued and outstanding AMC common shares. Again, today we answered your call. Because the dividend is only being distributed to our current shareholder base as the dividend record date, there is also no dilution from this initial issuance of the APEs associated with this dividend, because these new APEs all go and only go to the holders of the company issued AMC common shares. The number of issued and outstanding AMC common shares will remain 516 million after the dividend is paid, and each shareholder will also own 1 APE for every AMC common stock held. Now, how is that big? How does that expose synthetic shares? Well, think about it like this. If that day comes around and you do not receive your APE share, well, you got synthetic shares. Now, why is this so groundbreaking, right? Because hedge funds don't want this to happen. They don't want you to not get your ape coin. They don't want an investigation. They don't want to be dug into and to really find out what has been going on, because we know what has been going on, right? So what would they have to do to make it so synthetic shares didn't get exposed? What would they have to do? Quick second. Think about it. They would have to buy AMC stock and return it to you. If they have synthetic shares out there and they know about that, which how could you not? It's all done on a computer. It's all numbers. Well, you would have to go out and buy AMC stock. So that is the bullish part of all of this. That is how synthetic shares will be exposed, but also how this could help AMC before that ape coin is ever issued. And I think that's the biggest thing to pull out about the whole synthetic share situation. It's directly, like he said, a share count, and exposes the whole shit show charade that we have been a part of for the last year and a half. Now, you also do get this I Own Ape NFT, and that's pretty cool as well. But let's continue on. It says, yep, 516 million AMC preferred equity units will trade on the New York Stock Exchange with the symbol APE. Yes, you heard that right. APE, AMC preferred equity. This is different than a straight stock split of common shares, but nonetheless quite similar. You will get 1 APE tax-free as a stock dividend for each 1 AMC common share that you own, at least for now. This big news today is not dilution, as the AMC preferred equity units all go and only go to existing owners of company issued common shares. So that's the thing, and I will repeat this because it can get quite complicated, especially when this is not a straight up dividend. It's different. So these 560 million shares, you're gonna get 1 APE per share, right? It's all computerized. If let's say you own 300 shares, but you only get 200 APE coins, well, we got a problem, and that would expose the whole charade that has been going on, that the SEC, that everyone else wants to ignore. So yes, it works as a way to essentially count the shares that are outstanding, reward shareholders, and boost the liquidity of AMC. Because on top of exposing synthetics, on top of all of that, on a fundamental basis, AMC will be able to dilute APE as time goes on, right? They do have the option to let's go ahead and pull this up, and this is a CNBC article, and it says right here that These preferred equity units are a workaround of sorts and free AMC up to sell additional units of stock as it continues to revive its business after the pandemic. After offering the 517 million APE units, AMC will still have around 4.5 billion units remaining that it could sell to raise funds. So that's the part that kind of fundamentally strengthens the business, because you're not diluting AMC, you would be diluting APE. So it's just another alternative way to raise some capital if there is demand for the APE coin. So that's the fundamental good thing about it. Also, you get a cool little NFT as well, which you can never go wrong with that. But the sixth tweet Adam Aron put out last night says, candidly, I have seen no evidence so-called fake or synthetic shares exist, but many of you disagree. This preferred equity dividend goes only to company issued shares, so it will have the impact of a share count or unique dividend many of you have sought. Today we pounce. As a special call out to our shareholders outside the US, this stock dividend will be issued on your shares as well, and you can easily join AMC Investor Connect at our amctheaters.com website to qualify for the I Own AMC NFT, and I own APE. It says 9, for so many reasons, including what we can do with it in the future, the introduction of AMC preferred equity units has the potential to immensely strengthen our company. Looking long term, we believe this move is not good news for those who root against us. 10, we repeatedly have said that AMC shareholders approved back in 2013 the creation of preferred equity. Each APE will have similar rights to a common share but cannot be converted into common stock unless shareholders now or in the future vote to approve that. 11, most important, APEs give AMC a vital new currency to pay down debt for M&A and to raise cash if we choose. They lessen near-term risk. We cannot survive this pandemic and increase the likelihood we thrive. All this fundamentally and deeply strengthens AMC. 12, I must tell you, it is complicated, but it really is satisfying to play 3D chess, especially if you know how to play it well. Today, AMC Entertainment announced both vastly improved earnings and our game-changing new APE Securities. And what he actually said today, just for the fun of it, we'll go ahead and read this. It says, I just had a very positive interview with none other than Jim Cramer on CNBC. He seems sad that, in his words, the apes hate me, while Cramer calls them as he sees them. He has always been fair to AMC and to me. Apes, it is time to kiss and make up. Take that for what you guys want. But the long story short of all of this, guys, this exposes the synthetic shares of AMC. Simple as that. If people are not getting their APE, if people don't get their APE, well, we got a problem. There's obviously more shares outstanding than there shouldn't be. The way that is bullish, and the way that we could actually see a pretty big rally, and the reason we're probably only down about 4% when usually the day after earnings you're down in between 8 and 15%, is because hedge funds, if they have synthetic shares, they will have to buy back their stock unless they want to expose their synthetic shares, essentially. So I think that's important to point out. And let's go ahead and take a look at the Ortex data just briefly. And also, let me know down below, I definitely typed in Ortex. Let me know if you guys have any questions on this down below in the comment section. We will surely be able to answer questions and make sure everyone is on the same page when it does come down to it. Now, as far as the option activity, you are looking at 25% positive order value. You are seeing a lot of calls that are still coming through. $20.50 calls, $14.50 calls, some $18 calls. You're seeing a decent bit of call activity as well, but 25% positive order value, 17 orders totaling $1.09 million. As far as these shorts, you do see 18.4% short interest off free float, 24.71% free flow out on loan, shares out on loan 127.33 million, days to cover 2.99, and 100% utilization. Cost to borrow max at 9.87. Cost to borrow average at 8.8 and cost to borrow minimum at 7.26. This is something you should expect after earnings comes out, after a big market moving event, or a just an event in general that can move AMC stock, you would expect the cost to borrow max to come down just a little bit, and that is what we are seeing for the day. Currently, AMC down about 4%. It could be a whole hell of a lot worse, and we are still holding up at where we were just at, you know, around $18 per share. So all in all, I think the hedge funds are pretty worried about what is going on. At least I would be if I was a hedge fund, and you're going to have to buy back your stock that you have out there, synthetic, and if you don't, well, you're going to be in a bad situation. So that is that. Let me know if you guys have questions down below in the comment section. It is a, you know, an interesting situation nonetheless, so we'll probably continue to talk about it over the next coming days so everyone is on the same page. The last thing we need is a bullish thing turning into not such a bullish thing, because people don't understand, you know, what the implications are or what is going on. So that is it for this video. Hit the like button, subscribe to the channel, do what you guys want to do. Get your free stocks down below in the description with Webull, Moomoo, and Public. And if you want to come trade with me live in real time, link down below in the description as well. You guys enjoy the rest of your day, and I will see you in the next one.